Hello, it's Dale here, and today I want to introduce you to Vivek, who is one of our head traders of the Funded Trader Academy, and I want to show you how his expertise can transform your trading. Now, Vivek is a true master of smart money concepts. He has developed his own smart money trading strategy, which he is trading every day on a $2 million account, and honestly, he's one of the most skilled traders that I've ever met, and I'm incredibly proud to have him on our team. Now, here is the exciting part. We are offering a complete course on Vivek's trading strategy. In this course, Vivek will walk you through every detail of his strategy step by step, and he'll teach you exactly how he trades his $2 million account, and he's holding nothing back. His course is very clear, well structured and easy to follow, and most importantly, it is proven to deliver results, just like it has for many of our academy traders who are now achieving great success with Vivek's strategy. And if they can do it, so can you. Now, this is a very rare opportunity because this course is typically exclusive to our academy members, but right now you can get access to that course as well. Alright, let me now hand it over to Vivek so he can tell you more about what he does and about his strategy.
Hey guys, it's Vivek here. Up until now, my smart money trading course was only part of the Funded Trader Academy, but we have decided to open it up to the rest of the Trader Dale community. I'm super excited about that as we are seeing very encouraging results in the Funded Trader Academy with members using these principles. In fact, we have had multiple members doing over 5 figures in only their first few months. While that's obviously not something anyone can guarantee, it does illustrate the potential. The most common feedback I hear from the members these days is that they are able to read the market so much better. Before I go further into that, let me introduce myself. My name is Vivek and I have been trading for nearly 7 years. I currently trade my own funds as well as large funds from prop firms. What I want to show you is exactly how I trade and give you an objective trading model using the smart money concepts. It starts with understanding as to why smart money principles are so important. As we know, the bigger institutions, like the top 10 large banks, nearly control 80% of the volume and move the markets. As a trader, we need to understand the institutional order flow and try to be on the right side of the trade. As they say, we need to be part of the group hunting liquidity and not become part of the liquidity. My smart money course will help in identifying the key institutional reference point and also provide an objective method to dissect the market real time. So let's get into that. Smart money concepts provide an objective framework to form a bullish or a bearish narrative. And this truly differentiates smart money concepts with any other specifically pattern-based trading system or processes. Now, having said that, let's try to understand the building block of a smart money framework. Now, as per the market efficiency paradigm, smart money is only looking for two things, right? The first is to really purge liquidity pools above old high in form of buy stops and below old low in form of sell stops. And number two, to identify areas of inefficient price action to offer fair value to the market participants. And the crux of the entire concept of smart money is really to understand these two principles. So let's understand the key building blocks of smart money concepts. Number one, it's really all about understanding the phase the current market is trading in, right? So it's consolidation, expansion, retracement, or reversal. And as you start to read the price action, applying the principles here, you'll be able to get better to understand the phase a current instrument is trading in, right? Depending on the time frame you're looking at. Number two, where the price is trading at. Is it trading in premium or discount? Because the smart money wants to sell at premium and buy in discount. Again, very, very intuitive, right? Number three, understanding the liquidity pools and how the smart money is engaging with these pools, right? Now, these pools can be, the pools from a session like a Asia, London, New York, or it could be a external liquidity like, a weekly or a daily pools or an intraday pool, right? Based on the intraday market swings and so on. So let's just quickly look at this example. Now, this is a ES, which is S&P 500 futures. If you look at how the liquidity pools are engaged in, right? So you have the Asia high and an Asia low. And if you really look at it, when the London started, it actually purged the buy side right here, and then the move towards the downside started, right? And this move essentially demonstrates as to how the smart money would actually purge all the buy stops before making a move downwards, right? And this is something that it's very, very prevalent as you start to look at the liquidity profiles, right? And it's a very, very important constituent to understand the price action. Then comes really to understand the change in status of delivery or price. So whether the delivery is on the buy side or the delivery is on the sell side, right? And that really extends in order blocks. That again is one of the key constituents of smart money concepts. Number 5, how can we have an objective way to engage with the market with a change in structure? Now this is very, very important, right? And this is where the concept of breaker comes in. Now if you look at this price, the price is making a higher high, right? So it was an uptrend, but then when the price, there's a change in structure and the price breached this low, next time the price is trading in to this area, which is a breaker, then we see something like this, right? Again, if we have the right context and we apply some of these concepts pertaining to these institutional reference points, right, of buying and selling, it becomes a very, very important concept, right, and very effective. Number 6, even if we are trading intraday, it's extremely important to bring the higher time frame bias into our trading, right? And this is one of the key things that are going to be taught in this course. Number 7, understanding the relationship between the time and the price, right? Often we pay a lot of attention to price, not really giving too much attention to price. But what you will learn in this course is how the price and time is aligned, and the best of the entries happen at a given time interval when you can expect the price to move or expand in either direction, right? And this is one of the very typical example, especially on a reversal sort of a day, where what you'll see is that after consolidating here, the price is sort of expanding, the retracement, another expansion, retracement followed by the smart money reversal, right? And typically, if we have the profile like this, you will see something like this, where a high in this case or a low, if you just reverse this, is made during lunch, and there starts the reversal, okay? And then you have 2 other stages of distribution and so on. The important thing that I want to highlight here with this very quick example, even though I'm talking at a very high level, is to understand and for us to appreciate as to how the best of the setup happens at a specific point in time. And then comes the final point, which I want to highlight here, is the trading model. Now we do have a trading model which is aligned to time and price action, and which really would bring in a lot of other constituents of smart money. Now what we do trade is a macro model intraday, and this is a highlight, one of the examples where this is a price action and this is NASDAQ futures, where price makes an aggressive run at a given macro. The price starts to come down, give us enough indications, signatures for us to identify them as bearish, and then price comes and purges the sell side liquidity, which is a target, right? This example. Now another example, very similar, where we have a liquidity pool that has been identified. The price comes here during a macro, runs this short-term liquidity, followed by this SMT, and again there's a lot of terms that you may not understand, bullish signature, and then the price runs over. Some of these examples pertaining to the model that we have, and again the last one, liquidity pool, macro, bullish signatures, and then run towards that liquidity. So hope you've enjoyed the info. Again, this is very high level, and you may start to appreciate the importance of smart money concepts. And for some of you guys that are using volume profile or order flow already, you'll find the combination of concepts extremely powerful, especially if you are really looking to enter, let's say we are an order flow or a volume profile, and you see that opposing liquidity has been purged. It just gives you all the more probability for the trade to be successful. So that's about it, guys, and hope to see you in the course.